All right, so welcome to Talk Tickers, where we help you get right to the good stuff in these corporate earnings calls. And today we're going to be diving into Amarin Corporation, looking at their fourth quarter and their full year results for 2024.
Sounds good.
All right, so we've been through it all for you. And let's just jump right in.
Okay.
Give us the top line numbers. What are we looking at here?
Yeah, so Amarin, they reported $62.3 million in revenue for Q4 2024. That's down from $74.7 million or the same quarter a year ago, but still got them over that $200 million mark for the full year revenue.
Okay.
And maybe even more importantly, they're sitting pretty with almost $300 million in cash and no debt, which,
That's a good position to be in these days.
Definitely is, yeah. And one more thing, they announced that they're going to be adjusting their ADS ratio. That's their American Depositary Shares. It's basically a way to make sure they stay listed on the NASDAQ.
Interesting. So revenue's a bit down year over year, but that cash position looks pretty strong. Yeah. And we'll have to keep an eye on that ADS thing. But let's dive into the details here. Starting with their performance in the U.S. market, what's the story there?
So in the U.S., their product revenue for Q4 came in at $44.2 million. That's down from $64.9 million a year earlier.
Okay.
A couple of reasons for that. One is the generic competition. More generics are on the market, which means they're having to lower their prices.
8 times.
And then the other factor is that CVS, big pharmacy chain, decided to move their product Vazkepa from exclusive to not covered on their formulary. So basically, less coverage from CVS.
Ah, okay. So those generic competitors are cutting into their market share.
Exactly, yeah. And they expect that CVS change to keep affecting their numbers at least for the first half of 2025.
Got it. So some headwinds there in the U.S.
Yeah.
But they're still making money though, right?
Yeah, their U.S. business is still bringing in a good chunk of cash.
That's the important part.
It is.
Okay, so let's shift gears and talk about Europe. Are things looking any better over there?
Well, things are looking up in Europe, actually. They saw some good growth there.
Oh, that's good to hear.
Yeah, their European product revenue hit $4 million in Q4. That's a $2.5 million jump from the year before. And they saw strong performance specifically in Spain and the UK.
Interesting. Okay.
Yeah, and get this. Every single European market where they've launched Vazkepa, they saw demand increase from Q3 to Q4.
So they're gaining traction.
Yeah, they are. And they're focusing on a specific group of patients, people with established heart disease who are at very high risk of cardiovascular events.
Makes sense to go after that niche.
Yeah, it's a pretty big market too. Over 5 million people across Europe fall into that category.
Wow.
And with that strategy in mind, they've managed to lock in pricing and reimbursement deals in 10 different markets.
Nice.
Even in Italy, they got access to regions that make up more than half of their potential patient base.
That's impressive.
It is.
Okay, so U.S. is kind of bumpy.
Yeah.
But Europe looks like it's got some serious potential, especially since I'm remembering that they've got patent protection there until 2039.
Yeah, don't forget about that, 2039.
All right, so let's move on from the U.S. and Europe. What about the rest of the world? How are their partnerships doing?
Partnerships are actually a bright spot for them. Revenue from those partnerships in the rest of the world jumped up to $11.9 million in Q4.
Wow.
That's a $7.7 million increase year over year. So things are moving and shaking.
They're definitely expanding their reach.
Yeah, they are. And it's thanks to a bunch of factors,
Right.
Making progress with regulatory stuff, expanding access to the product, and really building up demand through their network of 9 partners.
9 partners.
9 partners, yeah.
Wow.
One of the big highlights is their partner in China, Edding Pharm. They launched the product there for cardiovascular risk reduction.
Nice.
Yeah, they're starting off focusing on the self-pay market while they try to get listed on the national retail drug listing in China.
So that's the big goal.
Exactly. Once they get on that list, it's going to open up a much bigger market for them.
Yeah.
And then in Australia, their partner CSL Seqirus got Vazkepa listed on the pharmaceutical benefit scheme. And they're seeing really strong demand right out of the gate.
That's awesome.
It is, yeah. And then there's Canada.
Right.
Their partner HLS just got reimbursement in Alberta, so now they've got public access across all of Canada.
So they're covering all their bases.
Mm-hmm.
Very good.
And sales in the Middle East and North Africa are up too, especially in Saudi Arabia.
Okay.
And last but not least, they're making progress in Southeast Asia with their partner Lotus. Regulatory approvals there are expected sometime around 2026.
That's a ways out. But good to know they're thinking long term.
Yeah, definitely.
So it sounds like they're really firing on all cylinders internationally. which, with the U.S. market being what it is, that's got to be a big focus for them.
Absolutely.
All right, so we've talked about the revenue picture, we talked about the different markets, but let's zoom out a bit and talk about the bigger financial picture. How's their overall financial health looking beyond just that big pile of cash they've got?
Yeah, so financially, they've been really focused on controlling their expenses. They actually managed to cut their operating expenses by 26% in 2024.
Wow, that's significant.
It is, yeah. And that includes a $50 million reduction that they had previously committed to.
Good on them.
Yeah, and of course, as we mentioned, they ended the year with $294 million in cash and zero debt. So that cash position has been stable for the past 9 quarters.
Pretty remarkable consistency.
It is. And on top of that, they've been renegotiating their product supply agreements to match the current demand, which, it's a smart way to conserve cash.
Makes sense. So it sounds like they're in a good spot financially.
Yeah, they're in a solid position.
All right, so we've got to talk about research and development.
Mm-hmm.
Are they still investing in the science behind their products?
Oh, absolutely. Research is still a big priority for Amarin.
Good to hear.
Yeah. They're continuing to invest in learning more about Icosapent ethyl. That's the active ingredient in Vascepa and Vazkepa.
Right.
And there's a lot of science backing up the benefits of this ingredient. There are over 500 publications out there that look at its clinical effects and how it works.
500 publications.
Yeah, it's pretty impressive. And in 2024 alone, they supported 45 new publications.
Wow, so they're really building that body of evidence.
Yeah, they are. And all this research has helped them get Vascepa and Vazkepa included in over 50 clinical guidelines, consensus statements, and scientific recommendations all around the world.
That's got to be a big win for them.
It is, definitely. And they've gotten regulatory approval for the Reduced-IT indication in 15 countries and regions outside the U.S. and Europe.
Remind me what the Reduced-IT indication is again.
Sure. So Vazkepa was a big study that showed that Icosapent ethyl could actually reduce the risk of cardiovascular events.
Oh, okay.
And there's actually a recent analysis of the data from Reduce-IT that was published in the Journal of the American Heart Association. And it showed that Icosapent ethyl consistently lowered cardiovascular risk regardless of a patient's starting LDL-C levels. So that means it's a valuable add-on therapy even for people who are already taking cholesterol-lowering drugs.
Oh, that's big.
It is, yeah. And to top it all off, Amarin's going to be presenting new research at the upcoming American College of Cardiology meeting.
Okay, what are they going to be talking about?
They're going to be focusing on the antioxidant effects of EPA, which is a key part of their product on lipoprotein. It's also known as LPA. And they're also looking at how EPA might work together with GLP-1 receptor agonists, which are a class of drugs that are becoming more popular for treating diabetes and helping people lose weight.
So basically, they're exploring new ways that their product can help people.
Exactly. They're staying on the cutting edge of research.
Very cool. Okay, so we talked about a lot of stuff here, but let's go back to that ADS ratio change that you mentioned at the beginning. What's the deal with that? Why are they doing it?
Yeah, so remember how I said they're adjusting their ADS ratio?
Mm-hmm.
So right now, one ADS represents one ordinary share.
Okay.
But they're going to change it so that one ADS represents 20 ordinary shares.
Wow, that's a big change.
Yeah, it is. And the main reason they're doing this is to boost their per share trading price. That way they can meet the NASDAQ's minimum bid price requirement, which is $1 per share.
So it's basically a technical move to make sure they stay listed.
Exactly.
Yeah.
And the good news is that even though this change is going to reduce the number of ADSs that investors hold, the overall value of their investment in Amarin shouldn't be affected directly by the ratio change.
Okay, so no real impact on the bottom line for investors.
Right.
Got it. And when's this supposed to happen?
It's expected to go into effect around April 11th of 2025.
Okay, so mark your calendars, folks. April 11th, 2025.
Yeah.
Big changes coming to Amarin's ADS. That's right.
All right, so we've covered a lot of ground here today. Let's recap. What's the big picture takeaway for investors listening in?
So the U.S. market's definitely a challenge right now with the generic competition.
Yeah.
But the good news is that they're seeing strong growth internationally, especially in Europe.
Mm-hmm.
And they've got that rock-solid financial position with plenty of cash and no debt. So they've got the resources to keep investing in growth and research.
Yeah, and they're clearly committed to stay enlisted on the NASDAQ, which is a good sign for investors.
Definitely shows they're thinking about shareholder value.
Exactly. All right, so overall, a mixed bag, but some definite bright spots for Amarin.
Yeah, I'd say so.
Okay, so let's have some fun now. Let's move into our This is not financial advice segment where we throw out some, let's call them outrageous, but plausible trade ideas based on what we've learned today.
All right, sounds good. I've got a couple.
Okay, hit me.
So remember all that cash Amarin has.
How could I forget?
And no debt.
Plus, they're growing like crazy internationally, especially in Europe, where they've got patent protection until 2039. And management's been saying that they think the stock's undervalued.
Okay, I'm following you.
So here's a thought. And remember, this is not financial advice.
Of course not.
But what if you started a modest long position in Amarin? The idea is that if they can really nail it in Europe and maybe get some good news from their research or some new partnerships in other parts of the world, then their stock could really take off in the long run.
Yeah, the U.S. is dragging them down right now, but that international growth could be huge.
Exactly. It's a bit of a gamble, but hey, that's what this segment's all about.
Right. Exactly.
Yeah.
All right. So that's one outrageous but plausible trade idea.
Yeah.
Got another one for us?
I do. So we talked about how there's this growing focus in cardiology on addressing all the different risks for cardiovascular disease, not just LDL cholesterol.
Right.
And Amarin's doing all this research on LPA and how their product might work with GLP-1 receptor agonists.
Yeah.
So what if you did like a paired trade?
Okay. What do you mean by that?
So you go long on Amarin.
Okay.
But at the same time, you take a small, short position in a company that makes generic statins.
Interesting.
So the idea is that if Amarin's product becomes even more important for managing cardiovascular risk, then maybe demand for generic statins will slow down.
Makes sense because they're not the only game in town anymore.
Exactly. And Amarin could benefit from that shift.
So you're betting on a change in the whole way we think about treating heart disease.
Pretty much. Yeah. It's a bold move, but that's what makes it outrageous, but plausible.
I like it.
Yeah.
All right. Well, that wraps up our deep dive into Amarin Corporation's latest earnings call. We've gone through all the numbers, all the different markets, and all the strategic moves they're making.
We've covered a lot.
We have. And hopefully this has given you a better understanding of where Amarin stands today and what their future might hold.
It's a company to keep an eye on.
Definitely.
Yeah.
And remember, this was just our take on their earnings call. For the full picture, be sure to check out their official filings and announcements.
Always do your own research.
Exactly. All right, folks, that's all for today's episode of Talk Tickers. Join us next time for another deep dive into the world of earnings calls.
See you then.